Welcome to The Debate. Today we're digging into an investment analysis of Micron Technology. Specifically, we're looking at its strategic position in, well, high bandwidth memory, HBM, and the broader AI semiconductor market. We've got some source material here that lays out a pretty detailed picture highlighting various indicators and strategies.
Right.
So the core question we're tackling is this: how convincingly does this analysis really establish Micron as a compelling, high-conviction investment right now, especially when you weigh the technical signals against some of the market risks that are also identified? I'll be arguing that, yeah, the analysis gives us a solid framework for that high-conviction case, showing clear signals for growth and market leadership.
And I'll be taking the view that, look, while it's definitely detailed, perhaps even insightful, the analysis might be, let's say, overstating the certainty here. It feels like it might be underplaying some pretty significant inherent risks and maybe leaning a bit too heavily on technical patterns that are, well, arguably speculative. That level of conviction warrants a more critical look, I think.
Okay, well, from my side, the analysis makes a, frankly, remarkably strong bullish case for Micron. It really emphasizes its leadership potential in HBM and its critical role in, pushing AI innovation forward. The report lays out a company that seems to be on a clear path to recovery and expansion. Financially speaking, Micron isn't just like getting better, it's signaling something more fundamental. You look at that, what was it, 159% year-over-year jump in operating cash flow. Combine that with a pretty low debt-to-equity ratio, 31.95%. I mean, that points to a company rapidly building its ability to fund its own growth. That's crucial for stability in a sector that just eats capital, right? It's not just recovery. It feels like a fundamental strengthening. And then on the technical side, the signals are, I think, just as compelling. We see this clear box range consolidation, as the analysis calls it, between $108 and $123. That's typically seen as like an energy accumulation phase, the stock's building momentum. Plus, you have the short, swing, and midterm trends all starting to align, entering what the report calls a convergence formation stage. That usually points towards an upcoming move, likely upwards. And the Elliott wave analysis, well, that's a whole method for spotting these long-term price patterns based on investor psychology, right? It's particularly interesting here. It puts Micron in a fourth wave adjustment, basically, a consolidation after a strong run-up, getting ready for a significant fifth wave ascent. That suggests a powerful rally could be coming.
Okay.
And this climb, the report argues, is going to be driven hard by expanding HBM market share and better profitability, kicking off what could be a major new growth phase. Now, this isn't just theory, right? It's backed up by what seems like really strong community sentiment. You look at Reddit, the r/Micron subreddit, up 28% in mentions. Keywords, HBM3E, that's the latest high-performance stuff for AI accelerators. Earnings, AI semiconductors, they're all over the place. Twitter, #MicronMU, saw a 54% increase in tweets, 62% positive sentiment. Stock twits, 19% more mentions. And get this, 74% bullish bets. I mean, that collective buzz points to some pretty solid market confidence, wouldn't you say? An anticipation for what's next.
Okay, I absolutely acknowledge Micron's, well, undeniable potential in HBM and AI. And those financial improvements you mentioned, yes, they are noteworthy. However, I find that level of just unqualified optimism a bit hard to fully get behind when you factor in other critical elements that the report also details. While the analysis is thorough, it sometimes feels like it's weaving this narrative of almost inevitable success that, in my view, kind of understates some key risks.
Like what, specifically?
Well, for instance, the report itself explicitly points out that Micron's current HBM market share is lower compared to the big players, like Samsung Electronics and SK Hynix. Now, that's a significant competitive disadvantage, wouldn't you agree? Especially in a market that's really defined by tech leadership and scale, and where competition is frankly heating up fast. Then there are the legal risks. The report mentions technology leakage lawsuits. Those could pose, pretty significant threats to the company's path forward, its profitability. These aren't just minor bumps. They feel like real headwinds. And furthermore, while the current financial health is, yes, positive, the report itself brings up the, quote, necessity for future capital procurement
due to large-scale investments like HBM factory construction. Now, just calling this fuel to ignite an even larger flame, well, that might be simplifying things a bit too much. These are substantial financial burdens. They could strain resources, maybe require external financing, which, brings its own risks, more debt, maybe equity dilution. And finally, the technical analysis, the VPA, Elliott wave, it's detailed. But the report also talks about market fluctuations and this, quote, oscillating power struggle between buying and selling forces in indicators like MACD and RSI. Doesn't that inherent volatility kind of challenge the absolute predictive power of these technical patterns? It suggests that conviction based purely on them, well, it might be a bit premature.
Those rhythms you mentioned, they describe the past, sure, but their future tempo, that's far less certain.
Okay, I understand the skepticism about, relying absolutely on technicals. I get that. However, if you look closer, the analysis isn't really suggesting blind prediction. It's more about a sophisticated identification of these market rhythms, these repeatable patterns that, experienced traders often leverage. The V-pair long-term trend, when you combine it with that detailed look at the consolidation in the 108 to 123 range and the Elliott wave fourth wave adjustment, well, it offers clearer, more actionable patterns for spotting strategic entry points. It's about using the confluence, the coming together of multiple indicators to try and reduce that speculation.
Right. Confluence is key in TA.
Exactly. And the analysis gives specific scenarios for these entries. A short-term one around $131, tied to the third wave's progress, often the strongest part of a rally. A swing entry may be at $120 during that fourth wave adjustment, and then midterm entries at $108 or maybe even $80 if there's a sharp tip. These aren't just random numbers pulled out of a hat, they're based on observable conditions, like a MACD golden cross, which is a pretty standard bullish signal, or that consistent rhythm ascension the report notes in key indicators. So this structured approach, which seems honed through quantitative analysis, it allows for a more disciplined way to engage. It identifies these precise points where potentially that built-up energy is ready to, ignite the next phase, as you put it. It provides a kind of roadmap for an investor to anticipate and maybe participate in that projected fifth wave, offering, I think, a pretty robust framework for managing the risks involved.
While those patterns are compelling, I grant you that. How do you square that reliance on technicals with the report's own admission of significant external market sway and these macro variables? Doesn't that fundamentally cap their predictive power, especially for something labeled high conviction? I just find that level of certainty in technical patterns difficult. Look, patterns exist in market data. They're useful for looking back, no doubt. But the market is just profoundly influenced by external stuff, often unpredictable events, that technical indicators they can't see them coming.
Well, no system is perfect, right?
Of course not. But the report itself mentions the market swaying with every market news and the need to find inflection points and key points. So how does VPAR or Elliott wave really account for the macro variables and volatility risks it explicitly mentions, or the supply and demand risks? These are fundamental forces that can just throw off any market rhythm, no matter how carefully you think you've observed it. And those X marks the report uses, the ones indicating sharp trend departures and then rebounds, don't they actually highlight the very difficulty in predicting the future just based on past rhythms? It suggests these patterns are maybe more descriptive of what has happened rather than truly predictive in a way that supports high-conviction investing. It feels like a crucial distinction.
Relying solely on these patterns, it feels like you risk chasing a spark that some external force could just snuff out, making the whole thing much more speculative than the analysis perhaps implies.
Okay. The debate around market rhythms versus external shocks is clearly nuanced. Fair enough. Let's maybe pivot back to the company's fundamentals then. You raise concerns about future capital needs, but I really believe Micron's current financial strength changes that whole picture. You acknowledge the low debt to equity, the big increases in cash flow. These aren't just abstract numbers. They represent a real fundamental strengthening of the company's ability to generate and manage its own capital. So when the analysis characterizes future investments in HBM factories as
fuel to ignite an even larger flame, I don't see that as oversimplification. I see it as a strategic, growth-focused perspective from likely a sophisticated investor. It shows confidence, right? Confidence in the market opportunity and a necessary proactive step to grab a piece of that booming HBM market.
It's definitely proactive, I'll give you that.
Right. And the ability to generate that kind of cash flow demonstrates a strong inherent capacity to handle these capital needs. So viewing them not as liabilities, but as essential strategic investments for potentially exponential growth and long-term leadership. Well, these are the kinds of calculated expenditures that often separate companies really positioned for lasting success.
Advocate, you make a very strong point about the scale of Micron's current financial health. It is a significant factor, no question. However, I keep coming back to the explicit phrasing in the report. The necessity for future capital procurement may arise due to large-scale investments. To me, that reads as a clear flag, an acknowledgement of a potential financial challenge, not purely a strategic choice made from a position of infinite strength. It implies a possible strain on their existing resources, maybe, or the need to go get external financing. And that, as we know, can bring substantial risks, more debt, maybe dilution, maybe constraints on other parts of the business. So while the current numbers look good, yes, a significant ramp up in CapEx, especially in a market like HBM that's fiercely competitive and changing fast, could dramatically shift the company's risk profile. I think it's just crucial for investors to really scrutinize how these future funding needs might impact that reported financial soundness down the road, maybe medium to long term. If this fuel needs significant outside help, it subtly changes the story from purely organic growth to growth that might be fueled by more leverage or dilution. And that kind of capital outlay, it's a major thing for any careful investor looking beyond the next quarter's balance sheet.
I see your point regarding the caution needed around future capital, but let me offer perhaps a different lens on Micron's competitive landscape and its market position right now. The analysis, pretty unequivocally, I thought, presents Micron as a leader, someone driving AI innovation in HBM with this explicit expectation of explosive growth. The momentum highlighted there isn't just wishful thinking. Think about that community sentiment again, the big jump in positive mentions across Reddit, Twitter, StockTwits, with most people betting on a rise. Now, you could dismiss that as just noise, but isn't it also reflecting strong market confidence? A collective belief maybe in Micron's standing, even with those acknowledged market share differences.
Sentiment can be fickle, though.
It can be, but positive sentiment and this widespread anticipation of growth, they can create a powerful momentum for the stock itself, almost a self-reinforcing dynamic. When sophisticated players see the broader market expecting a major shift, it counts for something. The report seems to frame the HBM technology competition and those technology leakage lawsuits not necessarily as roadblocks, but more like challenges for a leading company to navigate and maybe even leverage for greater innovation. These are the kinds of trials, aren't they, that often come before the biggest breakthroughs? Positioning Micron, potentially, for new highs as it deals with these pressures.
I guess I just come at it from a different angle. While, the aspiration for explosive growth is loud and clear, and community sentiment is, certainly a factor, the report flatly states Micron's HBM market share is lower compared to competitors Samsung Electronics and SK Hynix. That's not just a small difference. It feels like a critical competitive disadvantage in a market where tech leadership and sheer scale are just so important. That gap, combined with the ongoing HBM technology competition intensification and the lingering shadow of those technology leakage lawsuits, well, they represent pretty significant headwinds, don't they? How does Micron realistically achieve that predicted explosive growth and hit new historical high points if it's fundamentally playing catch-up on market share and facing these intense legal and tech battles with established giants? Community sentiment, while it can move the price short-term, it doesn't just erase these fundamental competitive challenges that are right there in the risk section of the report. These feel like tangible threats that could easily slow growth, rack up substantial costs, or divert resources away from R&D, making that path to aggressive growth targets look a lot tougher and maybe less certain than the optimistic view suggests. The competition isn't just a hurdle, it's a constant drain and a very real threat that needs, I think, rigorous scrutiny.
Okay, so wrapping up my view. While yes, acknowledging the inherent risks in any market investment, this analysis of Micron, I believe, presents a really compelling story. It's a company seemingly right on the edge of significant, maybe even transformative growth, really driven by HBM and AI. You have this confluence, the improving financials, the strategic investments framed as necessary fuel, and these quite specific technical indicators pointing towards a potential fifth wave ascent. Together, they seem to provide a robust, actionable framework for investors who are looking for those high-conviction type opportunities. And that positive community sentiment, it just adds another layer, reinforcing that optimistic outlook, suggesting the market broadly sees Micron's potential here.
And from my perspective, look, while Micron's potential in HBM is clear, undeniable even, the rather enthusiastic presentation in this analysis might not be fully accounting for the sheer magnitude of some of those inherent risks we discussed. The lower market share compared to giants, the intensity of the competition, the looming legal issues, and those significant future capital demands, they all introduce a level of uncertainty that, for me, makes an unqualified, high-conviction label feel challenging. I think it's just crucial for investors to critically weigh these very real structural factors against the more optimistic technical and fundamental projections. The potential for growth is certainly there, but its intensity and its longevity, those seem subject to some significant external pressures that demand really careful thought.
Well, I think both sides of this discussion really underscore the multifaceted nature of investment analysis. It shows that even with a detailed report like this one, there are always different lenses, different ways to weigh the opportunities and the challenges.
Indeed. The material certainly gives a deep dive into Micron, and hopefully this debate has offered our listeners some varied perspectives to help them in their own thinking and decision-making process.
Absolutely. There's always more to explore in the source material, and we definitely encourage our listeners to dig in further and form their own conclusions.